Okay, so brand new week, the 4th of April, Monday. We are looking at the dollar index, the Aussie dollar, and also the Kiwi dollar. So going through some trade analysis. If you are watching us on YouTube, this is recorded live for the Traders Club members. So this will be uploaded for Traders Club members first, and we'll upload this onto YouTube later into the day. So if you're not already a club member, make sure you join the club. Links are in the comments below. With that, let's get started. First up, quick disclaimer, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself. So please remember to do your own analysis prior to entering any trades. Right? So this is because we are looking at some trade ideas, some possible trade setups, in particular for today, the Aussie and the Kiwi dollar. So with that, just doing a quick review or quick check of the news to be had for today and this week. Today being Monday, the 4th of April, with the Aussie dollar in particular, we haven't seen, there isn't much news today. We've just seen a news at 9 a.m. inflation gauge month on month increasing slightly from a 0.5 to a 0.8%. So inflation for Australia looking to move towards the upside at 0.8%. But bear in mind that tomorrow, 5th of April, tomorrow being the first Tuesday of the month for April, we do have the RBA rate statement and cash rate or rate decision coming from the Reserve Bank of Australia. At this point, anticipated is no change to stay at that 0.1%. So not expecting any increase from the RBA for the interest rates, but despite the inflation for Australia picking up, this is despite the Australian economy doing quite well. So no rate increase at this point, but anticipation is that we're going to see further rate increases into the future towards the end of the year. I think I saw that news. Where is it? Let me just check. Well, looking at further rate increases into the end of the year, not right now, right? So no rate increases anticipated for tomorrow. Interest rate decision from Australia is to hold, but this might bring some upside to the Aussie dollar. I'll tell you more about that shortly. Later into the night on Tuesday, we do have the ISM services PMI for the US looking to improve from a 56.5 to a 58.6. Right, we do have a whole bunch of PMI numbers to be released for the Eurozone and for the UK as well. I'll tell you more about the Eurozone tomorrow. Following on from that, Wednesday, a bit of a break, not a lot of news there. On Thursday morning, early Thursday morning, we do have the FOMC meeting minutes. At this level, might be quite interesting to get into the minutes there on Thursday morning, getting an indication of why the FOMC only raised rates by 25 basis points instead of that 50 basis points that was expected. Not a big surprise, you know, they've spoken about it, they've came out and talked about why they've only done 25 basis point, primarily because of the Russia-Ukraine conflict, but just might be interesting to find out more about why they might be looking at that 25 or why they did that 25, whether there's any further details of that. Right, following on from that, Thursday, nothing much else. On Friday, we have the CAD employment numbers to be released. Unemployment rate looking to drop from a 5.5 to a 5.4. So, and then employment change looking to improve slightly, not as much as previous. So you can see that for this week, not a lot of Aussie news, not a lot of Kiwi news to be released. On Tuesday night, I just saw we do have a GDT price index. GDT is the price of dairy products sold at an auction. So dairy prices do have an influence on the Kiwi dollar but we're looking at minus 0.9% previously. Might change towards the upside there, so we might see some upward move on the Kiwi dollar from Tuesday night, right? So with all that, what could we anticipate? Not a lot of news for the Aussie, not a lot of news for the Kiwi. Looks like it might resume towards its trending scenarios. We might see a bit of a retracement for today before the trend resumption later into the week. So with that, just a quick review. On Friday last week, we did have the US non-farm employment change numbers. It was 750. It was revised from a, where was it? Revised from a 678. So an upward revision on the non-farm employment change number. Expected a 492K, came out at a 431. We didn't expect the employment numbers, the non-farm employment numbers, to beat the forecast. I was actually anticipating that 450, 430 number, because it was going to be a bit unsustainable to expect the non-farm numbers to keep at that for the high 400s, the 500s or 600 number. So, you know, that drop, despite being lower than forecasted, is still a positive number, still a good growth number in terms of employment for the US. Unemployment rate dropped from a 3.8, expected a 3.7, came out at 3.6. So somewhat along our expectations, unemployment rate did drop. But the main thing to focus here is average hourly earnings went from a 0.1, so revised from a 0% from a 0.1 to a 0.4%. This upward revision indicates again that inflation applied to the US economy, and as inflation runs hotter, as inflation runs high, likely to force the FOMC, the US FOMC, into further rate actions, or maybe a bit more aggressive rate actions. There has been a lot of talk about rate increases at that 50 basis points in the next FOMC meeting. So we're looking at that possible move towards the further rate increases from the FOMC at 50 basis points. That's also why we saw some dollar strength being applied. So speaking about dollar strength, here looking at the dollar index, with the news on non-farm payroll, we actually saw that spike upwards for the dollar. Right, I'll zoom in a little bit. We saw that spike upwards for the dollar before retracing back and consolidating at this 98.46 level. Right, anticipation we had was that it was going to sit in this level, it's going to test this level before we saw further upside. I think for the dollar index, at this point, we're likely to see it come back in, test this zone before that move towards upside. So still holding the analysis constant, still holding that view, we're likely to see something like this, a test back down. So I'll move this slightly across, right? We're likely to see that test back down into the zone before that upward move again for the dollar index. So I'm still looking for further dollar strength, possibly not today, maybe into tomorrow and later into the week, looking for that consolidation here at 98.46 before that push towards the upside, which actually might be quite interesting given that we expect the Aussie dollar, no change from the RBA, possibly the further trend following move for the Aussie and also the Kiwi dollar. So what actually could happen here for the dollar is that as it comes lower and push up, what we could be looking for on the Aussie dollar, right? Aussie dollar here on the H4 time frame, we've seen it bounce up from this 74.83 level, now at 75.10, 75.10 level. What I'm anticipating here for the Aussie is a bit of a cap towards the upside. I think that we might see the Aussie move up towards that 75.40 level, right? So for that move towards 75.40, it only looks like a 28-30 pip move towards the upside for the Aussie dollar. Could look to buy it up, but this is a very short-term trade. What I would rather do is look for it to move up, test that resistance level, and look to sell it down, look for that similar trend or that similar consolidation, that similar move across at this 75.40 level. So what I would do, one trade idea is to look to sell down, wait for it to move up towards that resistance level, and look to sell down if it rejects that resistance. So you get an opportunity to keep your stop loss very tight at about 20 pips. Take profit could be about 40. So you're looking at a 1:2 risk reward ratio towards the downside for the Aussie dollar as it rejects that 75.40 resistance level. Alternatively, if we do see it move up and break above that point, right? So no trade at this level now, but if it does move up and break above this point, I like it when it reacts to a resistance level. Again, you can keep your stop loss quite tight. If it breaks above at about 75.50, you can look for further upside on the Aussie dollar. How much higher can it go? We have to switch to the daily time frame, look for further upside. Right, so very high level would be at that 78.45, which is very high. So I think another level would be 77, and then the next level down from that would be at about 76.23, or maybe a bit lower at about 76. Right, so again, back to the H4 time frame. If we were looking to buy the Aussie dollar towards the upside as it breaks above that resistance level, what you could be looking for is a 1:2.6 risk reward ratio. Okay, so a quick review again. Some trade ideas for the Aussie dollar is if it goes, given that it goes up towards that 75.40 level, if it breaks higher, you can look to buy at about 75.50, a 20 pip stop loss, a 50 pip take profit level, a 1:2.6 towards the upside, towards that 76 resistance level. If it hits and rejects this 75.40 and turns down, then you can look to sell below that 75.30 level. Again, 20 pip stop loss, 40 pip take profit, a 1:2 risk reward ratio towards the downside for the Aussie dollar. So both upside and downside potential for the Aussie dollar, but it will depend on how it reacts to this 75.40 level. At this point, nothing to do for the Aussie dollar. Wait for it, let it move up, let it test that resistance before deciding whether to buy it up or to sell it down. With that said about the Aussie dollar, looking at the Kiwi, a lot more straightforward. I would say that the Kiwi, last time we spoke about it, we were looking for it to push higher. It didn't happen. At this point now, sitting at this 69.31 level, I would look for it to move only towards the upside. I wouldn't be looking to sell it down, as we looking at it, it feels like it's going to trend back up, same like what it did towards the end of March, as we saw it push above this point towards the recent high of 69.82, or even as high as that 0.7 level. It just missed 0.7 slightly. So for Kiwi dollar, a lot more straightforward. I would say look for a buying opportunity above 69.40, above 69.40, so quite close. Take profit at just slightly before 0.7, so about 54 pip take profit level. Stop loss, you could be looking at about 25. So you're still looking at a 1:2, slightly above 1:2 risk reward ratio towards the upside for the Kiwi dollar. Again, wait for it to move and break above this resistance level, close above 69.40, and then look for that buying opportunity towards the upside for the Kiwi. So quite a few trade ideas here. both the upside and downside potential for the Aussie dollar on the H4 time frame. Kiwi towards the upside as it breaks above this point. If it were to turn down, I would say sit it out, wait for it, look to see whether there's any buying opportunities at 6873 or 6880 for that bounce back up, similar to what it did towards the 22nd of March and the 29th of March. Look for it to bounce back up towards that resistance. But at this point, I think that a retracement is a bit unlikely. We're likely to see it sit at this resistance, break towards the upside, and then look for that buying opportunity. So quite straightforward here for the Aussie and the Kiwi dollar. I think that we do have a few more trade ideas on the euro, possibly on the pound, but especially on the US yen. So make sure you tune back in for the trade ideas where we do this tomorrow, the euro, the day after the pound, and then on Thursday, the yen. A few trade ideas to be had there. If you are looking to trade, not a lot of longer term trades. Keep your trades a little bit more short term. We're looking to see some uncertainty being resolved from the Russia-Ukraine borders. We might see more trade opportunities being had from that point on. With that said, trade well, trade safe, and take care now. Bye-bye.